The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Wednesday, the 4th of January, and we're looking at the Dow trying its best to rally. It had a little bit of an early pop and then it pulled back, is now down 26. I want to go straight to the UNG. I'll come back to all the indices because we've had a number of questions, number of emails about UNG. And what we were looking at, and we had a caller last week who said in the 12s, I think 1280, they were looking to at least establish a starter position. Well, yesterday, it's trading right now at 1284. Yesterday went a little bit lower. It went down to 12. Let me give you the exact number. UNG is natural gas, United States Natural Gas Fund. It went down to 12.41. If you look at all the technicals that I'm looking at, that's the daily. The 9 is way under the 9-period exponential moving average is way under the 14. That distance, that means that the histogram, well, we'll see, the day's only just started, but so far the histogram is expanding. It's not contracting. If you look at the MACD, the moving average convergence divergence, very negative. If you're looking at the slow stochastic at 4.86%, yes, it's in an area. Remember, I like to look at the stochastic on the upside. Over 80% is good. Over 90% is very good. At 95% and steady and flat is fantastic. That's what you want to see. That'll sustain the up move as long as possible. But on the downside, when you're in the 5 to 4% area, that is, I don't like the term oversold or overbought. I use that for the on-balance volume. It's the only technical indicator that I talk about as being oversold or overbought, and that is oversold. The stochastic is just it's in a sell mode. It's in a sell designation. So every technical analysis book says over 80% of the stochastic is overbought, under 20% is oversold. The implication by saying over means that you're expecting that it's going to turn around. I say no. If it's flat, showing no inclination to change its direction, that says stays flat. So this is a very important moment for the UNG. If you look at the natural gas continuous contract, you'll see it's almost at the low of the day. And the MACD here again is very, very negative. Stochastics at 4.55. On balance volume hasn't yet gotten to oversold level. It did for that big bounce back in December where it went from under 5. What was that, 5? This is a continuous contract. Remember that the price will change, get smoothed out. But from 5.23 on the 6, it rallied. I mean, that's a big percentage move to 7.006. But we haven't quite got to that. So I'm still very tentative. I'm just watching it. We're not doing anything. We had a spectacular move in the Chapman wave. We're always looking for peak Ds. We had a big move that we took advantage of, going to that peak D above the 200-period moving average, and then it collapsed, and that was back in November. So I'm watching this. The other question I had was Tesla. Is this the time to start a position in Tesla? And what I'd said is I was looking for a Chapman wave. This is called a price volume reversal. It's a climactic reversal. We had that in a stock called Zuitis right here. And I said, and we had a little bit of we had bought this going to the peak D and then we got out of it. But that move on the 3rd of November at 124.15, that's what I call a Chapman wave. This is the volume price climax low. And in this particular instance, it says that whenever I see anything like this, where the volume is a multiplication of the usual volume, I look at it and say, if we get a rally off the low, there should be a rally that lasts at least 28 sessions. If it can hold very well after 28 sessions, it could even go to 56 sessions. Well, I'm not going to count it right now. This went over 28, so now it's in that 50-something position. But all it's saying is that it's not going to go back to 124.15. So we got out of it. I'm not prepared to get back in just yet. But that's what I was hoping to see with Tesla coming out with news yesterday about the volume of sales, and it's had a negative. Certainly, the action and reaction has been negative. So in that regard, we're looking at Tesla. I had said that I'd prefer to see it under 105, going to the Chapman Wave inside track propellant zone, and that's where I would put a 5-point stop. And that's kind of what I would look at. But it's only a test, and that was the question. Chris wanted to know, could I have it as a kind of a test case? Yes, that's where I'd have it as a test case, but only as a bounce. I think there's still a lot more to go. Let's go to we've got a caller, and I'm going to go and see. We've got Costas in Arlington. Is that right? Is that Costas?
Yes, hello, Basil. How are you, sir?
I'm good to speak with you again. You are looking at?
Amazon. You told me to call back on Wednesday. I bought it yesterday, 25 shares.
Okay. So now what you've got is, I thought you were buying less. I thought you were going to buy in increments of 5.
No, 25, I said.
Okay, 25. All right. So the 25 says, so you bought it at about 84-ish, and it's now trading at 83.49. I think, as far as I'm concerned, just as a feeler to start along, and remember, we're talking about this as stepwise moves. There wasn't necessarily numbers that we were looking at to add the next positions. I said if it was a starter position, you might have to, in the beginning, have a little bit wider stop. But we discussed this, and I said you would still have a stop even on this position, right?
Yes.
Okay. So I like the way that the technicals are just starting to improve right now. And all I would say is it's improving for a bounce. And you're looking at this as a potential add to over a period of a few months. But
no, I'm looking at this for a year or so.
All right. But adding to it over a few months to hold for a year or so, right? Yes.
Yes, that's correct.
So within that context, what I am going to say to you is you've got your position. I'm going to say 5 points on a $84 stock is about 7.5%, maybe 8% risk on that position, just for the moment, because I think in the next few days, I'm anticipating that the 5th of January of last year was the top in the Dow. Let me just see what the S&P was. I think it was within a day. Let me just have a look. I think there's going to be an anniversary bounce, unlike what one would normally think if we don't get the Christmas going to the first week of January rally. Yeah, that was on the, let me just get that right now. That was on, it's a long time ago. You're on a daily chart, takes you all the way back. Give me a second. I'm scrolling actually with my mouse going to, there it is. Okay, oops, I went a little too far. That was the high on the 4th. So that was today exactly is the anniversary of the high in the S&P. Tomorrow is the anniversary of the Dow. I'm suspecting that we are very close to a rally attempt, but we've got to get out of the rectangle. And I'm implying that Amazon is correlating to the Dow and the S&P, and I shouldn't do that. I need to put it together with a QQQ. So hold on a second. We'll come right back because the QQQ is down $1.30 at 263.31. Almost the same pattern as Amazon in a way. I'll be right back with Costas in Arlington, Massachusetts. Dow's down 50, S&P is down 0.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So we were looking at Amazon. Amazon's down $1.77 at 84.06. It's almost at the level that Costas has bought it. So Costas, because you're going to hold it for a year, I'm inclined to say, at least for the moment, maybe a 5-point stop is okay, because if it does take out the low that was made on 4 or 5 days ago, which will be, if I can get my mouse to move across, there it is. That was with a low of 81.69. That would take you just below that. My suspicion is if it actually goes lower than that, you could probably go to the 76 level in this phase. And the way I'm looking at it right now, I see some buyers coming in, especially for the very beaten down stocks. So I'm going to say, just for the moment, let's have a 5-point stop. I don't really want you to get in and out, because a 5-point stop means that at some point you're going to have to make up a lot of points to really start making money. And I only want to add to it at higher levels. So I'm going to say for this particular entry position that you've got, I make it a mental 5-point stop. I wouldn't make it a fixed one, because at how it gets there, it might be just an intraday slide and then a close above it, and then you're out. And then what do you do? So I'm going to say I'm watching it closely. I'll talk about it every day on my show, because a lot of people have asked me about Amazon. And I don't think it's ready for the big move at all on the upside, but I do think it's starting to find a base, because if it starts to move very well, but I don't think that it's an add to position that you add your next tranche. It might be that I say, hey, take profits now, and let's see if you can get in again a little lower down, and you're building up a kitty so that you really got a good cushion, so that as you add to it over a period of months, you've got yourself both a cushion, and you're getting to understand it, that you can take some money off and then put some money back. Let's treat it that way. So for the moment, a mental stop, 5-point stop, let's call it 89.70, 79.70 is kind of the stop. But let's just give it another couple of days and we'll talk again. But I don't see anything wrong with that particular entry as a starter for a move over a period of months. I hope that helps you.
Okay, thank you, Basil.
Good. Thank you for calling, and let's keep in touch. I'm watching it closely. Thank you very much.
Bye-bye.
Bye-bye. So a couple of now let me do this because I said that I would do that before we got to any of the other areas. So the UNG, just once again, as Duffy in the Den says, Widowmaker. It's really tough. I got it right now at exactly the point where if it's going to work, especially with that gap down, it didn't have the volume spike to the downside. That did have the volume spike. Not that I counted it as a volume spike for a turnaround back on the 5th of December. Why? Because it was a day early. It has to be the exact day of a gap down on horrible news where everyone just throws in the towel like you saw. There's so many of those. But in the meantime, I'll go back to the one that we were looking at. We don't have it anymore in the opening call. I am looking to see how it holds support. Zoetis Inc. produces medicines and vaccines and for pets and livestock. This is, it's in the right area because people already, pets are the last thing they're going to give up. Pets and Ulta. Let's see where Ulta is. Pets and the creams for anything to do with beauty, like Ulta Beauty, that's the last thing that people give up in any recessionary times. And I think that for pets, if the pets are used to whatever it is, foods or whatever, or in this case, medications, people go out of their way to do that. So they're two different charts. Ulta is at the highs. It's got this amazing pattern that keeps going to the Chapman wave inside track resistance level and then pulls back, holds the 14-period moving average, uses the 9 as a springboard, and pops to the upside. So Ulta is trading at 476.30, up 4.66. A real nice V-shaped pattern that went to a peak E. That was in early December in the 480s. This is E right there. And then it had a pretty sharp pullback to the 50-period moving average, and now it's making the V-shaped recovery. It's doing very, very well. So, yeah, I'm not putting them in exactly the same position. I'm putting them in the same morality. Or is it not morality? Vanity. Vanity and morality, the two Ys. And one is vanity for the Ulta Beauty products, and the other is morality because you just, for your pets, you go all the way out. I do not have a pet. We once had Huey Lewis and Bernie Ernie, the two little parakeets, which once... one of them I had to give injections every day because it had diabetes. It's a funny story. I'll tell the story sometime. This is not the time. I'd rather look at stocks. But it did have diabetes, and I did have to give it an injection every day. And it died in a completely different circumstance. Very sad, very sad. Bernie Ernie, our little budgie, my kid's budgie. I've always wanted a dog, but who's going to walk the dog at -6 on January the 6th? Not me. I might love it. I might love the dog, but I'm not going to be walking at that time. So, okay, let's get back to the story. So I wanted to say that a question came in about gold. Look, gold has gone to a higher high. It's gone to 1871.3 in the continuous contract. It's walking the 9-period moving average, holding the 14 as key trampoline support, and then pops to the upside. It's in leg C in the weekly chart. Now, funnily enough, and we often see this, look at silver, look at the left side chart, and look at the middle chart. That's the daily on the left, the weekly in the middle. And look how superior silver is being. But there's just a chance right now that silver is starting to stall. You see the highs in silver? It works much harder. It has my rule of 136. So it has at least 6 bars before it takes on a new recovery high. Recovery high. In this case, it's a multi-month high. And within that context, silver's done way better. But I think that gold is trying right here to catch up. And very often we see it's like a relay race. For any of you ever run relay races, you know that handing the baton over is just crucial. Remember how the United States and the Olympics, the team, twice have lost the baton. I mean, that is just unforgivable. There's just never an excuse for that. We used to practice that over and over, handing over the baton. Well, handing over the baton when silver acts better than gold and then hands the baton over to gold. Gold has just a momentary upside flurry, and then it starts to pull back. I'm not saying sell or anything. I'm just saying it starts to pull back. That's what I'm watching right here, because if you're looking at the EUR USD, and I'm jumping around a little bit because you have to do that in the market. Look at the vertical. Look at the technicals when it went to peak D, the fourth highest peak in the Chapman wave, right there on the 19th of October. This is the euro-dollar currency pair. Look how the MACD was very good, not as good as it was earlier on in November, but it was very good and steady. Look how the stochastic popped up, and then it failed almost immediately. The 9-period moving average was still very strong. That said, there's still internal strength. And then it ran along the 9-period moving average, didn't even touch the 14, and it went to a leg E, a higher high at 1.07, 1.079 on the 2nd of January. And look how technically weak. That is never a good sign. That doesn't say major sell. It just says, watch out, there could be a decline. And 1.043 is the 200-period exponential moving average. So the euro's pulling back. The USD JPY, as we go to a break, is trying to come off the bottom. Look at that. Nice little candle.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Folks, we're back, and let's see. So, question came in about GE, TPR, and also MUX. Can you look at MUX? Let me show. So, MUX is McEwen Mining, Inc. I think this is the same McEwen that Tom O'Brien has interviewed a couple of times here at TFNN. It's acting so well. It's up 48 cents, up 7.87% at 6.64. I really like this because it's broken away from the 200-period moving average. Now, the question is, can you look at it? I can look at it. If I analyze it, that's one thing, but I'm not sure if you're looking to buy it. If you had to buy it here at 6.62, I like it very much from the action. The MACD is excellent. The stochastic at 77%, getting close to the 80% level. The 9 period is way above the 14. The price is way above both of those. I like it, but would I buy a brand new position? Yeah, yes, I would. But I'd only have a much smaller position than I would have had if at the 200 period moving average of 5.40. It's over $1.20 higher than that. That's a big percentage. But I do like it because it's acting so well. But I would also have to have a smaller position with a wider stop. So yes, I do like it. Where would my target be? It's already gone past the target on the left side, which was the high that was made the week of the 3rd of June. That was a high of 6.49. Today it's already gone to 665. So the next level is just way higher. It's up in the 8s. It's at 870, and that was back in April. But I wouldn't do that. I just go to the next candle of importance, and that's the candle of the week of the 29th of April. That has a high of 7.40. So that's still a big distance. What I need to do just quickly is go to see the monthly chart says, wow, this is just early in its up move. If it's going to continue, which I think it's going to. But this is A, B, C, D, E, pulls back. A, B. Yeah, I've got a B in the daily, and I believe this is a B in the 120-minute chart. I like it, but I can now only say that this position has to be thought of as a trade, which might turn out to be something longer. So, yes, I do like it very much. I think it has tremendous support between 580 and 610 and 575 at this particular point. So if you're in it, I'm just saying congratulations. I would hold it. I would raise a stop on a little part of the position as money management. That's all. And that means I would have that might be taken out, but I'd like to keep the core position. If you aren't in it at all, at 863, obviously you're buying it at a recovery high. This is a multi-month high. Wait, we're going back. What are we in? We're in January. This goes back to 2022, April of 2022. Yeah, so it's almost a year that you're looking at this breaking out like it is. So I like it, but this position has to have a much tighter stop if it's just the first position. And you just have to say, well, I've missed the big move. Risk-reward-wise, I love the action. The weekly chart, flat stochastic at 90%. Start a position in any pullback. Give me a yell, and we'll look at it again to see if that's where you add to it. Next question came is PTR. PTR is a PRT or PTR? Oh, no, it's TPR. TPR. And I thank you for this because I was looking, I couldn't remember. I've been looking at the whole idea of Tapestry. It's like a search engine for your family ancestry. And I think that these things are going to do well, especially if there's any talk that gets traction. Not talk, there's enough talk, but if there's talk that gets traction about, there we go, put that in, about some kind of compensation, some kind of repatriation, some kind of anything to do with that, a lot of people say, hey, I'm going on to one of these sites. I want to see if we've got anything that we can talk about. So, yes, I do like it. And I'm not sure what the question is. My thoughts, should I stay or should I go? Stay. That's a simple one. Should I stay or should I go? Zip wants to know. I'm saying stay. The MACD has only now turned positive. Stochastic still under 80% at 70. The on-balance volume says there could be a pullback in the next couple of days, but only a pullback. I like it. A, B, C. It's in leg D in the weekly chart, but the technicals are very strong. And not only that, I think this is one in TPR. I think this is one for 2023. Even if there's a serious pullback at some point, I think that this is one that you can think of as a more intermediate term buy and hold, which is exactly what you're doing. I'm not going to even make a suggestion of taking a little bit off right now. I'll look at it again in a few days' time. But so far, it's at nice recovery highs. TPR, Tapestry, 39.50 up 67 cents, up $1.73. Next question was, the question was, yes, we have a little problem with the site, so my newsletter wasn't posted. I'll tell you exactly what I did because it's done. It was a trade. And what I wanted to do is WDH. I've been talking about this for a little while. Water drop ink, first micro drink, compact sugar-free cubes that dissolve in water. I don't know what the heck that means, other than it's just another one of those drinks. But look at this spectacular move. And what I'd said today, which didn't go out, so I can talk about it because it's a fait accompli, it's just done, is that if there was a pullback, what did I say? Trading at 324. Start small, trading long on a dip below $3.18 before 9:45 a.m. Eastern Time with a tight 0.06 stop. If long, at 3:30, a stop is 320. At 3:38, takes them off. At 3:48, stop is 3:33 on the rest. So what happened was it didn't pull back enough initially. It did eventually go under 316. It went to 318. It went to 315, but that wasn't the trade. So the trade would have been, well, this is a screamer. A screamer for me is a stock that's under $10, and it has the potential on an intraday basis within minutes, actually, to go 3 to 4, 5, even 6% higher. And you just got to take off what you can. And if it's possible to keep the core position through the end of the day, it means that you might have something that even lasts a little bit longer than just an intraday move. It could even, some of ours have held for quite a while. So this one was, we didn't get it. We wouldn't have got it because by 9:45 it didn't get to it. It got to it late, and the high today is 333. So 333 says at 338, let's see. So we'd still be in it. We would have raised the stop though. Yeah. To 320. Oh, we raised the stop to 320 and would have been out with a profit. So that's the way it is. Okay, that's done. There are a lot of these stocks that some of them have done really well. There's one that I wanted to put on today, GERN. It would have been a screamer, but I couldn't get it. It already moved. I saw it yesterday, and I thought, oh, I haven't looked at this for ages. Geron Corporation or Geron Corporation, hematological treatments. These biotechs, these microbiotechs have been unbelievable. Because someone in the den who looks at these very closely and does absolutely fabulous trades on these things. So yeah, so this was not a trade. I had it on the list. We've got other. CHRS was one that I've been following. I mentioned to subscribers the other day. I said, how do you actually play this? This was my choice today. Either go for CHRS, Coherus Biosciences, but I thought on this particular one, I didn't know how to get in because I didn't think it would pull back, and I didn't know how much it would gap up. So it closed, it had a high yesterday of $8.56, and it closed at 8.51. I would have tried to buy it under 8.53, but I would have had a time limit, and I don't know if we would have got below 8.53. They could have got it, and here it is up 13.87% at 970, right through the 200 period. Well, out of the two choices, this is probably the one I should have taken. I'll be back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
The question came in, AFib, which is Acutus Medical Inc. Let's see, Dan says, Basil, after you reviewed AFib, looking for it to hold 113, indeed it did. Now 152, I'm looking for $1.90. What are your thoughts? To get to 190 in this particular straight up move right now, I suspect that it might just stall just at 159. Today's high is 154, between 159 and 162. If it does that, then it could fill in this candle for just a little bit. I don't see any reason why your expectation of 1.90s is not inaccurate, because that's that inverse Chapman wave Roman candle. We've spoken about that. At any point, if it trades for, it's a weekly chart, so if it trades, in this case, I'm going to make it a full day. If it closes above 187, then there's a chance that in a very short period of time, within a week or two, it should try to get to 2.15, which is the high of the week of the 22nd of July. More importantly, I'm not sure what the news, this is news related because it's biotech. So it's either that it's got something, they're waiting for approval, I don't know what it is. Right now, because it's continued the move that started green, even with that peak deep pullback, that was on the 28th of December, but it went from 0.94 and it just started this green run all the way through. I think it's getting a little tired right here based on my on-balance volume, but also based on the MACD and the stochastic says, just be a little careful here. So I know you've got patience, so I'm just going to say yes, yes, and yes. Yes, it should get there. Yes, having a longer-term outlook. Yes, there is definitely strength building in the weekly chart, which is what you need. The monthly chart, it's almost embarrassing to be saying that you're trading this on the long side if one was looking only at the monthly chart. But the daily and weekly charts, it didn't even fill the gap. The week, that means the very next day. So the week of the 24th of June, it closes at 5.54, 54 cents. Next week, it gaps up with a low of 0.80. And then over months, the lowest it's gone is at 0.62. You remember the high of the 24th, the week of the 24th was 0.59. So it was 3 cents higher than it. Hasn't even filled in the gap. So this is saying that whatever it's doing is really good. So, okay. With that said, next question I had was Tesla. I'm sure I did Tesla. I said, yeah, that was my preference was to get it under 105. But if one got it right now, definitely a 5-point stop is the way I'd play it. And that was a test. And a test for Tesla. I do think I wanted to see yesterday to have a huge volume. It did, but a huge volume climactic turnaround. And I would have liked it to get closer to the Chapman Wave inside track propellant zone. It didn't do that. So that means it's a little premature, but I do think that Tesla right now is so oversold that it could easily have, if it doesn't, I would say 102 to 101 is absolutely imperative to hold on a closing basis. If it takes that out, then it's going right into this whole area, which is in the 96, between 91 and 88. I just don't think it's ready for that now. Even the weekly chart just suggesting it's just getting ready for a little bit of a pop, and that's just general with the market. What's today? Wednesday, so there should be some news coming out for the Fed a little later on. So I'm looking at this, and I'm being so selective for subscribers, and I have no. For instance, we got a dollar. What was it? $1.30 something stock yesterday. Did nicely yesterday. So far, it's up about 15%. Actually, it's more. It's now almost up 16%. A little screamer. I don't mind doing that right now while we're waiting. I mean, I have a list of stocks. So here comes a question. I wanted to buy GE a couple of days ago. I like the fact that it's closing, it's starting to move higher. I like the fact that it is returning, not necessarily to profitability in the general sense, because they are still there are debts. I mean, General Electric need a lot of work. But I think something's been done here that's correct. And they've just split off. The first time they're splitting off, they're going to GEHC. So I thought if we got it and we got the split, it would help us, because what happened with the split is if on the first day it has a decent bounce, then you're in the position and your new position is helping you. Your core position of General Electric is now way lower on price, but it's okay because you've got yourself another part of the puzzle because you still own that. It was just too complicated in the bookkeeping part of it and all that. But look at this, GHC, which is General Electric, brand new company, just started about a week ago. I guess they tested it out, but the real session was today. Made a low today of 53.50. It's trading at 60.13. It's up almost 6-7 points. I like this, but you have no history, right? But I do like the action. I like the fact that it's over the 200-period moving average. I like the fact that it had an opportunity to kind of meander with the market earlier on, and it didn't. Buying is coming in. So there are positions that we're prepared to take I'm prepared to take for subscribers that are in. I'm looking at under the radar, the stocks that have already had their big corrections, and all they need now is a little bit of relief on the upside to say, hey, now I'm establishing a base, and you know where the base is. At this point, some of them, you have no idea where the base is. They just keep making lower lows and lower highs. So in this particular case, this is just something I'm looking at. We don't have it right now. It's kind of risky. Now we're going to buy to 60 when the low is 53. You have to put in a 7.6 point stop. There are things that are going on, but there are stocks that I consider under the radar. All right, within that context, under the radar, I had a question about DocuSign. This is trying to get off the bottom. It's a real stock. Don't even look at the monthly. We're at 314.76 and a 314.70 two-bar Chapman wave reversal up at the top back in August of 2021. Plummets down to the look at this right there under 40. What was the low? 39 something, 39.50 in a 39.60, 39.50 area. And it had a big spike up into the 60, 61, pulls back, and now it's trading at 57. So $57, you've got DocuSign, which has a history of going to the 300s. General Electric Healthcare is at the same price, and it's brand new. Do you make a decision? Well, I think on one hand, you're in an area of healthcare IYH. The healthcare sector is having a sideways rectangle consolidation, but it's closer to the highs in the 300 area at 283 than it is at the low in the 250 area. So I'm beginning to say you can see already in the first few days of January the last week or two of December that we're starting to, it's not just a dull market. This is a market that's viable, but you've got to be very selective. And let me tell you, if we have to stick with some of these single-digit stocks a little while longer where we're trying to build up a portfolio, which we've got a lot of cash to do that for subscribers to the opening call, I'll take the time. I'm in no rush. I still think there are going to be a couple of 1,000-point down sessions over the next couple of weeks.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, maybe tomorrow I'll get back to doing some of these 1-minute charts and show you some of the techniques that I like to use. So I made that peak E and the 290s, 294-ish area, pulls back to the 50-period moving average and just going sideways. Sideways is a trading range. You've got to think of this as up, down, and sideways. Sideways is as important. So when you make the long rectangle, this is my contention here, that since we're going to wrap up in a few minutes' time, you've got Steve Rhodes in a moment. You've got great programming here at TFNN. Everybody's back. Look, a rectangle formation can last a lot longer than your patience, even though there are people saying first 5 days of January are really important. You know, they are important, but they're important to me for many other reasons. If this fails, this rectangle, and we start to trade under 32,480, let's call it 32,450. Start to trade under that. You could have a 1-to-1 to the downside that takes you to the 31,500 level. That'll start to weaken a lot the weekly chart and the monthly chart. So as I see it right now, I don't want to get aggressively long when I'm looking at so many barriers and I'm looking at a rotation, even as I showed you in the gold market, you saw MUX was acting so well that if you look at something like you look at ASA, I haven't looked at it for a few days. ASA is looking great. This is ASA, Gold and Precious Metals Limited. Gosh, I don't even understand why for subscribers we didn't go right back into the gold area when we got taken out. It's just been acting so well. Look at that. Very nice. So yes, and when you look at the monthly and the weekly charts, these are just minor rallies, but it's a good start. And it's saying that in 2023, gold is in play. There's no question about it, as we're looking at least for the first few months. So with that, let me just make it clear that after Fed speak or whatever they do today, if the Dow starts to trade up 120 points and holds, that's going to be very good because it could start to break this resistance. But if it just gets stuck and it goes sideways can go almost all week. And then you've got to be a little careful and very selective. Have a wonderful day. Check out my opening call daily newsletter.